Kevin Warsh is struggling to escape his predecessor's problems. Federal Reserve Chairman Kevin Warsh came into office promising a new direction for America's central bank. But just months into the job, he is discovering that leaving the Jerome Powell era behind may be much harder than expected. Warsh took over the Federal Reserve in May, replacing Powell after years of fierce political battles over inflation, interest rates, and the independence of the central bank. Now, many of those same problems have landed directly on Warsh's desk. One of the biggest challenges is inflation. The Federal Reserve is responsible for keeping prices stable while also supporting employment. But policymakers are facing a difficult environment in which inflation remains a concern even as uncertainty hangs over the broader economy. That makes the question of interest rates particularly complicated. At its latest policy meeting, the Federal Open Market Committee voted 9-3 to keep its key interest rate unchanged. Cite Turn Reddit 39 Turn News 17. Warsh has emphasized that the Fed must remain focused on bringing inflation under why, stressed that the institution needs to maintain its political independence. Cite Turn 0 News 11. But that independence is already being tested. President Donald Trump has repeatedly pushed rates, arguing that borrowing costs should come down. The political pressure that became a defining feature of Powell's final years at the Fed has therefore not disappeared with a new chairman. In fact, Reuters reports that Warsh's effort to keep the Federal Reserve out of politics has become even more difficult as Trump has renewed his battle with the central bank. Cite Turn. That creates a serious credibility problem. If Warsh lowers rates, critics could argue that pressure from the White House. But if he keeps rates high, or eventually raises them to fight inflation, he risks coming into direct conflict with the president who selected him for the job. Warsh is also trying to change the institution itself. Before becoming chairman, he was an outspoken critic of the Powell-era Federal Reserve and argued that significant reforms were needed. But changing the Fed while simultaneously convincing investors that monetary policy remains stable and independent is a delicate balancing act. Financial markets are watching closely. Long-term bond yields have risen sharply at times as investors reassess the outlook for inflation, interest rates, and the direction of the new Federal Reserve. Cite Turn 17. That matters far beyond Wall Street. Higher bond yields can influence mortgage rates, business and financing costs, and ultimately the broader U.S. economy. Warsh therefore inherited more than just Powell's office. He inherited an economy still dealing with inflation risks, a politically divided